FRC 2025, the year Nigerian exchange surged by about 50% and inflation finally dipped below the 15% mark. The big question, can we sustain the momentum? But as we celebrate, the geopolitical landscape has shifted on their feet following the Christmas Day U.S. airstrikes against ISIS-linked groups in Sokoto. Well, today we'll break down the charts, the security alerts, and your wallet's outlook for 2026. Join us for this conversation. We have Ugodre Obichukwu, founder, CEO, Nairametrics, joining me via Zoom. Great to have you on the show, sir. Good morning.
Always a pleasure, man. How are you? Compliments of the season.
Compliments of the season. Yeah, so, definitely, I guess the stock market has given us, or given most investors a reason to smile this year. We've seen largely driven by the consumer goods and, banking counter. And we've seen some stocks really do well, in 2025. So what are you seeing, going forward? Are we seeing a bubble or a fundamental shift in value here?
Why are you being pessimistic? Why do you think it's a bubble?
I know, it's the bear in me.
All right. I mean, it's been a great year for the stock market, despite all the challenges that we've seen at the later part of the year. I think the stock market is up 49% year to date. Very likely to close borderline 48, 49%. I'll be surprised if it does hit 50. However, total market cap, which I personally hoped we hit 100 trillion. We're currently at 97 trillion. I don't know how we hit 100 trillion over the next 3 days, but you know what? Anything is possible. So yes, it's been a great year for the market. Some of the positives is that it's been local investors, institutional investors that have basically been driving the market forward. You've seen a lot of investment come in from both institutional and retail investors. There's a lot of capital that has been raised this year, whether it's even through public offers, right issues. You've even seen a lot of debt-related capital being raised as well. Commercial papers, according to SEC, hit over 700 billion between April and October this year. You've seen also a lot of government debt issuances, all successful and all largely oversubscribed. So it's been a bumper year for capital market operators. I'm sure that a lot of them are going to be declaring massive profits. For investors as well, who have very well positioned portfolio, also been a very good year with the market up 49%. So we look forward to 2026, Ladi, more optimistic, not as pessimistic as you.
All right, I guess the bears can, take a seat, at this point. But, we've seen other asset classes do really well, in 2025. We've seen the likes of gold. Gold is just, ripping new highs and, most of the metals at this point. And we're seeing that happen with, risk assets also rising, except for, maybe Bitcoin. What do you think the market is really trying to tell us here? Seeing gold, rising, risk assets also rising.
I mean, that's the global discussion. And if you look at some of the data and some of the analyst reviews that we've seen, it would appear that commodity prices are also going up, particularly for precious metals, largely because of a lot of global investors, institutional and wealth funds, essentially trying to maybe decouple from U.S. assets. So you've seen people essentially spreading their investments apart from just holding U.S. assets. They are also holding precious metals like gold, silver, and even Bitcoin. Despite the pullback that we've seen recently, Bitcoin is still almost at year highs, multi-year highs. So that is what is essentially happening, Ladi. So people are a little bit worried about what's happening in the U.S. The U.S. debt is at an all-time high. The political gridlock in the U.S., the tariff issue was also a major concern. So you're seeing a lot of countries or a lot of businesses or investors that typically would hold large part of their portfolio in U.S. debt also now, essentially diversifying, and gold appears to be one of those assets that have gained largely for this, even silver as well. And that's what's going on. And you're also seeing, not just that, you're also seeing global markets also at at multi-year highs as well, whether it's the US market or the EU market, just as we're seeing record numbers in Nigeria, you're also seeing record numbers in some emerging markets and in some well-developed market as well. So it kind of appears that there's a lot of capital globally flowing. Let's remember that some of the capital surge that we saw because of COVID-19, QE, as some would like to call it, a lot of the money that was printed globally, a lot of that money is still floating around. And so that is also driving asset prices forward. Interest rates are also expected to come down, at least from the US point of view, the end of this year. That would also continue to drive capital flows into various assets. So it kind of looks like, bearing any major insecurity issues globally, asset prices all seem primed to keep going up. Now, let's also, bear in mind that there were fears that we could be heading towards some kind of global recession, particularly with some of the decisions of the US from the tariff increase, from the global tariff war, as some call it. But that hasn't really panned out at the moment, because it kind of seems like when that threat sort of comes up, then the politicians find a way of sort of dialing back. And so investors seem to have studied how these things have panned out. I've seen that, look, there's a lot at stake, and global world leaders are not ready to throw the entire kitchen sink out. So they are also a little bit coy, as much as they sound like they're trying to disrupt the global world order. So what you're seeing is a lot of reordering. You're seeing investors smarter with how they're pushing their money around. Investment flow is still happening. It is unlikely that you're going to see a pushback, at least early next year. Perhaps maybe as we approach the midterms, you see how politicians play and how things happen. When I mean midterms in the US, but for now, Ladi, it looks like the bulls are at least over the next 3, if not 6 months.
All right, and talking about the U.S. At this point, you did mention the U.S. Fed, cutting rates. Let's bring it out to what's played out, right here in Nigeria. How significant is the reported, U.S. strike on ISIS-linked targets, in Nigeria, from an investment and market risk perspective, in your opinion?
I mean, from an investment and market risk perspective, I really don't see any negative impact. Like I said, I think investors have found a way to sort of, explain some of these things out. They don't see it as existential to their investments. Let's bear in mind that, this happened in the Northwest, not in where we would consider economic zones for foreign investors, like maybe Lagos or even Abuja or even Port Harcourt. So for a lot of investors, they are still locked in. I don't think, and from the feedback that we've gotten from some of them, they are overtly worried. Let's bear in mind that Trump had started warning the government as far back as in early November that this could happen, and then this eventually happened. And it also, as much as it was shocking that this is basically the first time that Nigeria, you've seen missiles hit from the US, and that it's never happened before. Investors, I think, kind of look at it from a different angle, and you can see that from the way asset prices have surged over the last week or so. Even when this attack did even happen, markets are open now. I suspect markets are probably going to open positive, so I don't see any negative impact here, Ladi. And bear in mind that Nigerian market, local market, when I mean market, of course, we mean equities and debt market, have largely been driven by locals and not, and not institutional or foreign investors. We do see foreign investment participation, but not at the level to negatively impact market good here. But security remains an issue, remains something that investors are watching ahead of 2026. But for now, it appears the reaction is largely muted.
Yeah, it was quite interesting, watching international media actually reporting what played out in the oil market and relating it to what's playing out in Venezuela and the strikes in Nigeria. That was most of the news, last year. It was quite interesting, seeing that. But does this incident materially affect, Nigeria's, sovereign risk profile, or credit outlook?
Well, I don't think it does. There were concerns at some point in the last couple of weeks that we could see a reduction in our credit rating, largely due to some of the insecurity that we've been seeing, not necessarily because of the strikes that we just witnessed, but because of the plethora of insecurity issues that has been gathering over the last weeks or so. That was our expectation, and that is still likely possible. Larry, let's not rule that out. And we all know the impact of this. If this does happen, it means that Nigeria's ability to borrow is going to be a lot more expensive. Not that we still can borrow, but we're likely going to be paying a lot more in interest rates. So that is a huge concern. And if there's any downer in all of this, I kind of think that is the downer from an economic and financial point of view, and that rating agencies could also, look at Nigeria's credit rating and downgrade it based on it. But larger than that, and Ladi, I think the bigger problem is even Nigeria's looming fiscal deficit. I think we saw the MTF numbers recently, and that was very, very disturbing. When you're seeing, as of July, government oil revenue down 70 something percent, actual versus budget. So that was essentially an eye opener and a shocker to a lot of people. So this is not even about oil prices and crude oil production, which obviously it appears our assumptions were highly overstated in the 2025 budget, and this is also something a lot of people had raised when this budget was pushed out. So, but the fact that we're seeing deficit widening for an already record fiscal deficit budget is a huge issue, and this is where you kind of think rating agencies will be looking closely at Nigeria's ability to continue to be physically at least compliant in a way, being able to drive down deficit while still increasing capital expenditure. And so, of course, you also know capital expenditure was way, way, way below budget. And with capital expenditure below budget, I am personally worried that we would see the sort of growth that a lot of us are anticipating in 2026. To be honest, if we touch 5% GDP growth rate next year, it would be a miracle, a huge, huge miracle.
I guess the government needs to get creative with revenue generation at this point, seeing the disparity there. But let's look at monetary policy now. Central Bank maintained a tight monetary stance in most of 2025. Do you think the MPC, Central Bank, they achieved their core objectives this year?
Yeah, I mean, the core objective was to keep, in monetary policy hawkish while also stabilizing the exchange rate and also seeing inflation numbers go down. And I think to that extent, you would say that the central bank has basically achieved all of its goals this year. And let's bear in mind that this is also happening in the middle of a major capital raise from banks. The central bank has also had a whole lot of reforms from the FX side, from the monetary policy side, from the financial stability side. So a whole lot going on. And I mean, if there was one government agency that you would want to give this plaudits, it obviously has to be the central bank because they've got a lot they've done this year, achieved in terms of achievement. At 27%, yes, a lot of us expected rates to be cut. I did expect it to be cut at the last MPC meeting in November. But it's understandable why they kept it hawkish. It's important to have full year data of the inflation numbers to see where inflation goes. A lot of us think inflation might pick up in December and January before it starts to taper down again due to base effects of course significant spending in the Christmas based on 30 December. However, that interest rate had to be kept that way because the CBN still believes money supply is still very high. They still believe that structural issues are still affecting the ability for inflation numbers to go down further. Yes, we've seen inflation numbers go down way faster than we expect, but there's still a lot of challenges out there. There's still a lot of headwinds. Now, bear in mind that while they did not, reduce interest rates, NPR, they still cut the amount that they pay banks for taking money from banks to 22% as well. So that in a nutshell also suggests that While in the wider economy hasn't seen rates go down, rates have also gone down within the interbank framework of the CBN. Of course, standing facilities are now plus 50, minus 450 basis points. So that you would say, well, is some kind of cut. So largely it has helped, but manufacturers won't be happy with the way rates are. Interest rates are still pretty high, at over 30%. But the benefit of that is you've seen a surge in commercial paper offerings. You've seen it in a surge in alternative, debt-related funding, which to a lot of banks should be a concern, because then banks might have to play catch up by next year, because a lot of the major lenders or the major borrowers, I beg your pardon, are now tapping into the debt markets, and a lot of them are tapping into this debt market successfully without having to give up collateral or a lot of the stringent requirements that banks should typically ask for. You would expect that next year when rates starts going down, banks would lend more, and maybe this might help the economy in general. But at the moment, the CBN has kept rates this high for obvious reasons. Next year, we do expect rates to come down. I do expect it when they meet in February. But of course, a lot of this will also depend on the data that the CBN is playing with by the end of January, Ladi.
All right, definitely hoping the banks, lend more in 2026. We did see the Securities and Exchange Commission there, mentioning the growth of commercial papers in 2025. Definitely we'll see who's able to lend more to most of the private sector. Thank you so much, Ugodre Mobichukwu, founder, CEO, Nairametrics. Thank you for coming on today, and I'll see you in 2026.
Always a pleasure, man. See you too.
All right, I'll take a break now. When we come back, we find out what's going on in the global economy. That's in a moment. Just stay with us.